Hi there, I'm Debbie Cowan with Prime Lending.
And I'm Lori Meaney with Prime Lending. Together, we have over 57 years experience in the industry. We're wanting to go over today the do's in buying a home and the don'ts in buying a home.
So we have 4 different do's and 4 different don'ts. What's really important and what we're looking for when we're going through the process with you and what could affect the process. So one of the do's that we see a lot is if you have filled out an application and they have put in their income information, you've given that information to us, and that's what we're going over. It's really important. Tell us if anything's changed, especially, I think, Lori, tell them one that we see a lot.
Yeah, so some that we see a lot is basically if you are a W-2 employee, making a regular 40 hours a week, and then all of a sudden you switch and get this great job offer to do commission only. That's a big no-no. We have to have 2 years. Yeah, 2 years of that commission. Or if you go to 1099, because a lot of times commission is 1099. So it's a big, big, big no-no to switch from W-2 to a 1099 type employment or self-employed.
Yeah, and there's also times that you may decide that you've gotten this great job offer and it's a W-2, but it's changing jobs and it's doing that right in the middle of the process. Yeah, we can definitely do that, but you have to notify us because we're going to have to look at getting the offer letter. We're going to have to get a verification of employment of your start dates. So even if you're going to do that during the process, which is perfectly fine, you got to let us know. So there is a process. There are things that we have to do. To Lori's point, going from W-2 income to 1099, definitely kill your deal. Because again, the reason why we're looking at that consistent income, we're looking at why, we're looking at that continual income. When you go from that W-2 to that 1099, there's no consistency there. So we want to make sure that, we're letting you know up front, make that decision to go 1099 instead of W-2 is probably going to give you a 2-year wait period and before we can do anything.
I was just going to say, we would much rather you tell us everything and let us help guide you and help explain
the whys
on doing the things that we tell you to do than for you to just assume not telling us and trying to keep it from us, because we always are going to find out. We'd rather you just tell us everything and then we can help you.
One of the cool things to do up front is to get some insurance quotes. Make sure that you understand that, hey, the house that you're looking at, that you're interested in, it has a 15-year-plus-year-old roof. It's going to affect the insurance quote. Let's get some quotes up front. We have some tremendous partners that we have done business with over the years that, we're happy to get you some information and let you know, is that insurance quote going to take you over the limit and debt ratio? I just heard Lori talking about one today that she had a customer that the insurance quote came in, and give us a little bit of information how that worked.
So we basically had got a few quotes. We obtained a few quotes for this customer, and the customer ended up getting another quote on their own or through their real estate agent. And basically what happened is their quote was $700 more than what our quote was a year.
Yeah.
It knocked them totally out of being able to qualify debt ratio wise. So I had to call them and say, you might want to consider choosing another insurance company, because by law you get to choose who you use. We can't tell you who to use, but you do have to make wise decisions, because if you want a house, you have to choose insurance that fits in that box.
Well, and a big thing that happens a lot of times, people use some of the bigger companies that everybody's heard of, the Allstates, the USAAs, and we're in Florida, folks. So, sometimes those companies that are the largest that you have your bundles with and things like that, they get the most claims. So they're not always going to be the cheapest. And again, we're not here to guide you and tell you who to use, but we also know that there are some companies out there that may be more expensive, not because they're offering you better insurance, just because they may have had more claims out there. So, we do have a great referral business that, we don't do anything but give you their name and let you get some additional quotes. Use whoever you want to use, but definitely check your options, because the quotes can vary quite a bit for the exact same insurance. So that's another important thing. If you're looking at houses that are on the older side, we always encourage you to get quotes up front, because that could make a difference not only in your ratios, but also just because why pay more money if you don't have to, right?
So another thing to look out for, let's say item number 3, you definitely want to keep a paper trail of deposits. This is something that kind of snafus a lot of people. They have money buried in the backyard. Believe it or not, yes, I had a customer that buried money in his backyard. So you do have to be careful of those things. If you throw a cash deposit in, they're going to want to know where the source of that deposit came from. You cannot prove it if it was buried in the backyard or in your drawer or your mattress.
Yeah, cash isn't king, right?
No.
Cash is not
No,
king like
not in
people
this
think.
case.
The one thing that we always kind of just go, oh my gosh, we're looking at your bank statements and you've got these multiple deposits in there, and we have to go, they're not payroll, deposited, they're not coming from your employment. Guess what? If it's a certain percentage of your income, we're going to have to definitely source it. And to Lori's point, mattress money, we get it. I mean, we know that people like to hoard their cash, and that's fine. It's just not great in the mortgage world. So if we can avoid cash deposits during the loan process, let's do that. Call us if you have all your money stashed away in the backyard, because we're going to give you some different alternatives. We're going to look at different programs. We're going to look at something that you're not going to hold on to that. We're not going to use that cash. It's just, again, to make your process smoother.
Yeah. And another example too, like I've had a few people that have been selling cars lately. So they're selling their cars to get their down payment. If you sell a car, you have to have a bill of sale, signed bill of sale. You have to show where you listed that car for sale. You have to deposit into your account the exact same amount of money that's on that bill of sale. If you do not, they could possibly tell us we can't use it at all. And then that's going to put you in a pickle because that's what you were relying on.
A really great thing that I try to tell folks, especially if they are short cash to close, right? And they're looking for things that they're going to be selling, is definitely talk to us before you make that sale item.
Yes.
Because, you can use cash. If that buyer of your car wants to give you cash, we can use it. We have to source it. But it might be a better solution to say, if you're going to sell that boat or you're going to sell that car, definitely still have to have the bill of sale, but have them give you a check. A check is always better than cash, because the government, and in our world today, cash it could be anything. It could come from drug money. It could come from terrorist money. It could come from any other source other than really what you used it for. So they're looking for the bad guy. They're not looking for, oh, you just have a bundle of cash that you've been saving. It's not that we don't trust you, and it's not that we don't know where that money came from, but we got to explain it to a whole lot of people about where that cash came from. So make it simple. And if you're going to sell something, maybe use a check.
Right.
Have them give you a check.
And
Cashier's check.
Yeah, and even if it is a check or a cashier's check, the thing to keep in mind, if you're going to sell that vehicle, don't do it a week before closing, because a lot of times the bank will hold that check for 10 days, up to 10 days. And then you're not going to have time to close.
We get it. And maybe you don't need that money for closing, but you're moving to Florida and you have a big garage sale. And you decide that, you're going to dump $6,000 cash into your account, and we need to see your bank statement before we close for some reason, we're going to have to definitely document it or back it out. And if we back it out and your cash to close is good, we're fine. It's when we need it, when you need it for your cash to close, that it becomes an issue.
Yes. And, the other thing is if you're moving money from one account to another, so you can prove the source of where it came from, but it does matter. So if you're moving from a savings account to a checking account, or say you have 5 accounts and you're wanting to combine it all into one, that's perfectly fine. But we have to have the statement showing you had the money and that you've transferred it.
And why is it? Why are we looking for that, Lori? Do you know? Do you know why we're driving these poor clients crazy every time we ask for more bank statements? Well, I'll tell you the reason why, by goodness, because we want to make sure that you have not taken out a loan, that you've not taken out other debt to cover that money. So when you transfer money from your savings account and we say, okay, now we need your savings account, it's because we're still looking. Did you deposit cash into that account? Did you go out and take out a loan that we're not aware of, that's not disclosed? And now it's going to affect your debt ratio. There are so many reasons behind the scenes of why we're asking for these large deposits that we're not trying to pick on you. There's a reason behind every single one of them.
Yeah, because you can't just take a $20,000 credit card limit and max it out and put it into your checking account.
Cash advance?
I was asked that.
What about cash advances, Lori? You had a couple
No
of those?
cash advances either.
Right?
No cash advances.
Yeah, we've seen some people go to, to live on They're going to, what is that place called? That one of those places that you go in there.
You go
take
in,
the
you take
instant
your
loan.
check. Yeah.
Yeah,
So
cash advance.
cash advances.
Cash advance loans.
Big no-nos.
If you're going to buy a house and you don't have enough money in your bank account to pay your bills, and so you have to go get a cash advance, that is looking at maybe mismanagement of funds. And we don't want to see cash advances. That's a brand new thing that's coming out that they're looking at that they didn't used to really care about. But they want to make sure everything about our business right now is ability to repay. Do you have the ability? Do you have reserves? Do you have money that left over after you pay your bills? Because I had a customer the other day that hasn't paid rent or a mortgage, hasn't had any living expenses for the last 7 years, and they had about $300 in their bank account. And so if you put yourself into the perspective of what an underwriter's looking at, and we're going to give you a $1,700 a month mortgage payment that you've not been making rent payments on, and you haven't been making mortgage payments, and you have $300 left over in your bank account, that is a question mark. So what I always tell folks, especially the ones that are looking to be a first-time home buyer, is think about being an underwriter and think about the fact that you've not had a housing payment. And now we're going to hit you with payment shock because you've not been making these payments. So for your sake, we always want you to have 2 months reserves into your bank account. We want you to have, if something happened, you could make 2 payments on your mortgage and still not have a problem. Because again, it's payment shock. And we want you to be comfortable too, knowing that you've paid yourself for the last 2 months and put this money in a savings account, and you've still been able to manage your funds and still been able to pay your bills, and you still have money to eat. So these are the whys behind all the things that goes on in our mortgage world. Is it can be very confusing and maybe annoying, really, while we're doing it, because we feel it too. We know, but guess what? That 57 plus years of experience, we've seen a lot of different things that have come up, and we've gotten around them. Lori's taught me a lot in the last 3 months that she's been here, things I've never seen before. And I'm like, I may not have even known to think this way. So that's where the experience comes in.
Absolutely.
And that's where, the opportunity to bounce things off each other has really benefited us and will benefit you as a client when you're buying. Because you cannot replace or even put into perspective how important experience is. It takes over everything. When we've seen things like this, and when we're telling you the do's and don'ts of why we're wanting to explain these things to you, there's a reason behind it. Because I can tell you, we have seen more things that have been catastrophic in the process and has broken people's hearts and causes a lot of undue stress.
And it could be avoidable.
And it's so avoidable.
Avoidable if you just talk to us.
Yes.
And, I'll tell people sometimes to get pre-approved 6 months in advance before they're buying a home. And it's because we can look at everything and
prepare
see it
you
as a whole and prepare you for what to do, what not to do, if you need to save more or what that situation is.
I mean, how many times have you gotten people's credit up to a point where there's no longer a credit issue?
Right.
Those are the things that we want to definitely make sure you have the opportunity to know before you go into it. So when you're looking for a house and you decide that, hey, tomorrow is the day I'm going to start looking for a house, tomorrow may not be the day. It may be 5 months from now. It may be 6 months. But we set goals and we set expectations, and we give you an exciting and really positive experience of buying your first home if you are a first-time home buyer. But these do's and don'ts kind of apply to every person out there, because
They really do.
It doesn't. I mean, the simplest thing that you think has no impact in our mortgage world can blow up our world just as fast. One of the things that Lori and I want to continue to do is educate you, especially when you're getting into this process up front, that we've got your back. Again, we've got the heart, we've got the hustle. We want to make sure that your scenario, your process is stress-free as much as it can be. And we want you to be as knowledgeable about the process as you can be so that everything goes smoothly for you.
That old saying, help me help you.
Yes.
It's true. I mean, help me help you. You have to tell us, you have to tell Debbie and I what's going on, what your situation is, so we can help prevent any kind of bumps along the way.
Don't be afraid to tell us everything, because the more we know up front, the better we can advise you. and we're not going to get scared away.
We're here for the long run.
Yeah,
We really are.
Yeah, we've seen a lot, so nothing you tell us is ever going to push us too far to the deep end. Every now and then we may have to do some additional work and stuff like that, but on the norm, it really is an easy process once you understand it.
When you are negotiating your contract with your realtor, sometimes you're going to ask the seller to pay the closing costs and things of that nature. You don't want to get too much of an allowance, meaning some money for closing costs, and then all of a sudden you see, oh, hey, they're going to give money for garage that's broke or whatever the situation might be, or a new roof, things of that nature. There is a cap on how much money you can get back. So all of that has to be taken into consideration, because you cannot get that cash back at closing. It would end up that the seller walks away with more money.
Yeah,
right?
yeah.
I mean, we've seen it where the seller's going to walk away with way more money
because
than what you negotiated, because you cannot give money back at closing. It has to be utilized towards just closing costs and prepaids.
That's it. There is nothing else that you can get. If you guys want to do seller credits for repairs and things like that, all that has to be done prior to closing. So when we tell you you have this allowance of 6% or whatever the case may be, it is 6% whether the closing costs and prepaids add up to that 6%. Anything that is short that 6% goes back to the seller. So we want to work the numbers for you so that you're getting the best deal as far as the negotiations are concerned. But you also want to make sure that you're not leaving money on the table for the seller, when you're doing those negotiations, and we can help you figure that out.
So the other thing you want to avoid is buying things through the process.
Yes.
So buying stuff through the process is a big deal. You get excited, right? For some reason, when you're going to buy a house, for some reason you want to buy a car too.
Or you want to buy furniture.
Or get the 12 months interest-free deal on furniture or appliances. It might be interest-free, but it counts as a regular debt and payment. So if you're borderline on those debt ratios, right, it can blow you out of the water, and then you don't end up with a house to put those appliances in. And so you have to be really careful.
Yeah, I'm going to tell you, I actually had an example just yesterday where, we do the do's and don'ts, right, during the process, and we go over. Don't open up any new credit during the time of the process. It is like a little magical genie that when you go to Lowe's to purchase your appliance for the new house and you open up that Lowe's credit card, we immediately get a notification that you've opened up and been approved for new credit with that information, and it has to go back through underwriting. I don't know about you, Lori, but with me, when I see that little message come over, UMA has come over, it means that someone's opened up a new debt. And I can promise you, it is always on the customer that has no room to go with the debt ratio.
Yeah.
So to Lori's point, we do have to count that new debt. So one of the things that when we say don't open up any new credit, don't buy any large purchases, don't do any of that stuff during the process, there's a reason behind it, because we will get notified once we run your credit, once your loan is in process. The underwriters are given that information, and we have to now start tracking what is your statement, what's your balance. You have to send on more documentation. So if you're buying a new refrigerator because your house you're buying doesn't have one, go talk to them and put it on layaway and have it delivered the day after closing. So.
Yeah, there is no opening new lines of credit before closing. There are so many different things that people run into when you hear clear to close, because we're going to tell you through the process at some point you're clear to close, and that's a happy day. You should be excited. It's joyous for everybody. However, that does not mean that you can go and open lines of credit between then and your closing day, because we can check credit up to the very last day of closing. I had a gentleman that was a preacher I did a loan for, and I've told you about this one, Debbie. The poor fella, he was 2 days away from closing, and he went and bought a car.
Don't do it.
Don't do it.
Don't do it. Everything is on hold until you have the keys in your hand.
Yes. So funded. That's the key word you're listening for, funded, and you have the keys and you have walked out.
Yes.
Then you can go get your refrigerator.
It's kind of like being in prison, right? It's like being in
Yes.
prison for about 4 weeks until you close. You're not allowed to do anything except what we tell you.
Exactly.
Well, thanks everybody for taking the time to listen to our podcast today. We want you guys to get into this housing market. We want you to get into it smoothly. We're so excited for you. We want you to understand the process, and we're going to help you every step of the way.
Absolutely. Between Debbie and I, we have the heart and hustle to help you all the way through. We do care. We do want to see you in that home. It means all the world to us.
Yes.
So let us guide you. Just talk to us. We'll work it out and see what we can do for you.
There is no in our no's.
Nope. It's just win.
It's just win.